What are clients saying to you? Because we have so many a confluence of factors here, whether it's greater refinancing as a result of the tax overhaul, what that does to the back end. We've got, as you say, a historic moment in terms of monetary policy and the retraction of that, but global issues going on too that will impact the US rate curve as well. What are clients saying?
Well, I think it's fair to say that because of the behavior, particularly of central banks, taking risky assets onto their balance sheets, reducing the quantum of volatility that we as private investors have to absorb and deal with and so forth, one of the effects of that, if you do it for long enough, is that in that environment you have to be short volatility in some form in order to perform, in order to make money. And so in some loose sense, if you observe somebody in the market today, they've survived the last 5 to 10 years, which means they have a short volatility strategy in place. Sometimes that's explicit. We call them volatility harvesters, people who literally sell volatility. Others have it in an implicit form. Some are more self-aware in this regard than others. But that's the critical issue. How do you unwind that in an orderly way? And that's not an easy question to answer because, like any other big environmental change, it really is the case that everybody is in the same spot,
the wrong way around.
And climate is changing, so to speak.
Do you see people starting to unwind that right now?
I think there's a lot of thought process about how to do that efficiently, more so than actual behavior in that direction. But you notice volatility's been inching up in all of these markets, and I think that's attracted the attention of investors, as well it should.